Hi, my name's Ian Murray-Jones and I work for Thomson Reuters. Thanks for joining me. Well, the election is done and dusted, so we thought we'd give you a snapshot of what might be happening in tax when Parliament reconvenes. The thing that is causing the most noise and light at the moment is tax cuts, that is, personal tax cuts. So I thought I'd focus on these today, but before signing off we'll run through a couple of other things that may be of interest to you. To contextualise the session, there were changes made in 2018 contained in an Act that talked about 3 phases. We are currently in phase 1, which operates to 30 June 2022. Then there are phase 2 and phase 3 legislated tax cuts. However, there are further changes proposed in the federal budget. These have not been legislated yet, but will be, or at least some of them will be. The final ingredient in the mix is that there has been conjecture since the election about further changes involving the bringing forward of the phase 2 rates. So, in summary, there are legislated changes spread out over the next 5 years. There are government proposals to change these, and there is conjecture that some of the changes will be brought forward. So it's somewhat of a heady mix. Also, a note of warning. I've had to prepare the slides from scratch, so if you notice any errors, then it's all my doing. Please do me a favour though and let me know. Get your sales rep to pass on a message. The first slide is pretty straightforward. This is phase 1, which, as Beatles fans knows, is when Doris gets her oats. The slide sets out the personal tax rates for the current year, which will be unchanged until 30 June 2022. This is the only time I'll mention any conjecture. Although these rates are scheduled to last until 30 June 2022, there has been talk in the political world that the phase 2 tax rates, which I'm about to show you, will be brought forward. Okay, the phase 2 rates are now up on the screen. These will operate in the period from 1 July 2022 to 30 June 2024. Now, you can see that there are 2 tables on the slide. The first is the currently legislated rates. The second reflects the changes proposed in the budget. If you look closely, you can see that only one number changes in the table, so not a lot of change really. But to reiterate what I just said, these rates are the ones that could be brought forward to change the current rates. As a bonus, I will shout coffee to anyone who knows what that reference to Doris and her oats was all about. Give the sales reps your detail and I'll get in touch. Now, let's move on to phase 3. Please remember though that you can pause at any point to look at the tables. Again, there are 2 of them on the slide, legislated rates and proposed changes. There is of course a lot of uncertainty about any changes to phase 3 rates, so who knows where we'll end up. Now, personal tax rates operate hand in hand with 2 offsets, namely the low income tax offset, or LITO, and the low and middle income tax offset, or LMITO. So we need to look at these as well, as there are also legislated amounts and proposed changes. Again, please pause if you want to take in details. You can see that as far as LITO is concerned, we can all relax. We know what the amounts are and there are no plans to change them. But it's a bit different with LMITO, so let's put that up. As the next slide shows, there are amounts set in legislation until 30 June 2022, but there were changes announced in the budget. Now, you can see that both tables show the same finishing date, that is 30 June 2022. Why 2022? Well, because the LITO and LMITO are to be merged into a single offset, which will still be termed LITO, but perhaps can be referred to, as per the slide, as the new LITO. This will take effect from 1 July 2022. Okay, we're done with personal tax. Now, what else? Well, the budget was, by and large, the government's election manifesto. Most people would say that it was very straightforward. Nothing grand sought or even hinted at. It was the quietest budget that I have dealt with. So the short answer is there's not much else. Parliament rose, however, with a large number of bills still under consideration, so presumably these will be back in play. One of the measures is the CGT main resident exemption for foreign residents. This was contained in the bill up on the slide. The bill proposed that the removal of the exemption would apply from 9 May 2017, subject to a transitional rule. The measure has been widely criticised, especially for its unintended effects and the considerable delay in legislating it. There were lots of other bills that were around before the election, but none of them contained anything that could be described as critical. However, there are a few other measures that are not in bills which will be of interest. Treasury has released a consultation paper on proposed changes to Division 7A. Details of the proposals are on the slide. The start date for any change is 1 July next year. And there are 4 other areas of change that will be of interest, which are listed on the next slide. First, the government released draft legislation about removing access to the small business CGT concessions relating to the alienation of partnership income. Next, draft legislation was released which would disallow deductions for expenses associated with holding vacant land. This would apply from 1 July 2019, regardless of whether the land was first held before that date. Third, the Board of Taxation has released a consultation guide to seek views about reforming the residency rules for individuals. The guide includes options for a 2-step model. Finally, the government released an issues paper about the early release of super on compassionate grounds and financial hardship grounds. That's all we have time for today. I really appreciate your attention. Please contact your sales rep if you have any queries that you'd like me to chase up. Goodbye.